Let's talk a little bit about what we saw, the weakness in the U.S. markets overnight and this potential anxiety about a partial U.S. government shutdown. How likely do you think that is?
I think it's very unlikely. We get this narrative every single year. It's almost like a soap opera. We get closer and closer to D-Day and then everything is fine. I don't think the market's paying a huge amount of attention to it. I think the market is more focused on other things. When you actually look at the risks out there, Russia-Ukraine conflict seems to be ignored by investors at the moment. And everybody is really focused on what's going on in China, also what is actually happening around the world with respect to interest rate hike expectations or cuts, the inflation narrative. That seems to be the focus. And then, of course, we've got upcoming earnings season as well, which is pretty much all priced in.
Now, we just heard from Jamie Dimon, what is it, 7%, he says. How high do you think rates are going?
Yeah, this was a really interesting story over the past few days. 7% seems to be everywhere at the moment. That's what he has been saying. This is not consistent with the employment data out there, the inflation data out there, and Q4 earnings estimates. You've got inflation at 3.7%. It's directly en route to normalization. You've got unemployment at 3.8%. And again, it doesn't look like it's rising in a meaningful way. And when you look at Q3 and Q4 earnings in particular, we're talking about 8.2% earnings growth. We're talking about 3.8% revenue growth already priced in. We do not see 7% even remotely on the horizon at the moment.
As we talk about earnings, we also heard from the likes of Target. They're closing 9 stores across the U.S. due to theft and safety concerns. We also got some news with Amazon and this antitrust lawsuit from the FTC. Are there any sectors that you're liking?
You know what? Q3 earnings, we always knew was not going to be great. We got earnings growth of a negative 0.2%, and we got revenue growth of a 1.5%. And a lot of this is already priced in. The tech sector seems to be very robust. You've got the Nasdaq up 25% year to date, along with Japan up 24%. So things aren't looking as bad as everybody thinks, bearing in mind the Q4 narrative that we seem focused on at the moment. And from an earnings perspective, remember, it's earnings that drive share price appreciation. You know, it's not all the negative sentiment we've seen around China or Russia, Ukraine. And when we look at the earnings numbers and we're looking for growth and what we're expecting to see, we're, like you said earlier, very focused on guidance going into 2024. And we're very obviously focused on what is going on with respect to China as well. And I think they're the 2 points that investors are really looking at the moment.